Well, good afternoon. Good afternoon, everyone. I guess it's evening. I think 5 o'clock is where the time goes from from afternoon to evening. What do y'all think? Time goes from afternoon to evening at 5 o'clock. And we are on here 5 o'clock live. It's 5 o'clock live. Y'all come on in. Let's see what's going on today. See what's going to be going on coming up in the market. Let's see what is going to be going on. What's going on? I realize I have to stop singing some of my songs because I had a song in a video and I wasn't even singing the real lyrics. I wasn't singing the lyrics of the song, but I was singing the tune. And I got a copyright claim. I got a copyright claim on my YouTube video because I was singing the tune of the song. I wasn't even singing the lyrics. So I have to be mindful of that at this point. I need to be mindful that I could have copyright issues, even though, it turned out that the people just basically wanted to be able to continue to see the monetization of the video. Like it was like, I wasn't monetizing, definitely wasn't monetizing their song. But again, I have to be mindful of these things. Now I have to be more mindful. So I have to, some of my songs is kind of how I process things. I sing my way through. Yeah. Good afternoon. It's Sunday. I hope everybody's having a really good weekend. I did see that the Ravens are whooping up, if not whooped up all the way on the Lions. Let me start my Instagram video. Start over on Instagram. Hey everybody, y'all come on in. I needed to telling followers that you're here. Okay, I'm gonna go ahead and tell them here when they show up. Maybe they'll be able to see the comments I've already made, letting them know to come over to YouTube so they can see. Hello, so they can see, everybody can see where we are. I'm going to put in the link in the chat. That's where I'm going to be, is over there. So you can see my chart. You can see my stuff over there. So YouTube, or you can find me on Facebook. If you find me on Facebook, you can also see my screen. That's what I'm after, is you being able to see the screen. Alrighty, so I'm going to spend a little bit of time this afternoon. I got a few things on my agenda. I got about 4 or 5 things on my agenda. So I got my little trusty paper this time. Usually I forget the things I want to talk about. I get off the call and I'm like, ooh, I wanted to talk about this. So we're going to talk about this week in the market. First of all, we're going to talk about SPX, which those kind of go together. We're going to talk about earnings, talk about which things are on the calendar. We're going to talk about automated trading a little bit, and then we're going to talk about some trades for the week. That's our agenda for this time. I'm hoping to do it in about 45 minutes, but I'm not going to rush it. I'm going to make sure that we have enough time to cover all the things as they need to be covered. I won't drag it out, but I won't speed it up too fast either. I'm gonna give it the time it needs. Okay. Hope everybody out there in the land can hear me comfortably and are comfortable with our discussion here today. I need to turn back on my moving averages there. So in case you didn't know, I'm Arlissa, right? Educator to Trader, hanging out here. I coach sellers on options. Option sellers is what I do. Option sellers. If you didn't know about option sellers, me, that's what I do over here, right? Most people are option buyers, but I'm an option seller. Option sellers includes things like covered calls, cash secure puts, credit spreads, those kind of things. That's all the stuff that's covered by sellers. Oh, shorting. Shorting is also covered by selling. All right. Let's show the pictures of what the market did last week. I think I'm going to go with this one. And then I'm going to present. Yes, I am. Share screen. Share screen, share screen. I'm going to share screen one. There we go. Let's see what we got here. So in the market last week, this is the daily chart. I want to switch to the weekly chart after, actually, so we can see what happened on the weekly chart. Got to make it a little big. This is Thinkorswim, TD Ameritrade, Thinkorswim. Those are the ones I use to look at. That's what platform this is. I'm a fan. I'm a fan. I'm a fan. So in case you were wondering, I like Thinkorswim. Almost all the teaching I do, the training I do is done on Thinkorswim. I do some things on Robinhood, but for the most part, I teach on Thinkorswim. So this is last week's candle. This is a candle from last week, this big red one. And it actually engulfed the previous 3 weeks worth of candles. You see this, the past 3 weeks have been engulfed in, well, the 3 weeks before last week were engulfed in last week's candle. This is a strong indication of continued bearishness, right? We also saw that last week, the 10-year bond yield went up as high as it's been in the last 16 years. Bonds going up means people are putting their money in the bond market and taking it out of the stock market. So that's why as bonds are going up, the stock market is going down, because people are when I say people at large are moving their money. So the people who, the big holders, sometimes not, the little onesies like some of us, but the big people move their money into safer places for their money, for maybe big retirement or big 401ks or hedge funds. They start to move money into safer places. So that may be what we are. They ride out the storm. They move the money so they can ride out the storm. And us little guys, we still over in here in the market doing our thing, but that's what's really going on. That's one of the things that's going on. There's a lot of stuff happening, but that's one of the things that's going on. It doesn't help that we are in the midst of war and rumors of war. That doesn't help things either. I don't believe the United Auto Workers have gone back to work. That plays its role there. The economy, we still have recession-related economy things, but the job market is strong. So people are still spending money. So inflation is still doing its thing. Recession has kind of been delayed because of that. It's all the things. There's so many different things that are like all working together and forming this what we're working with, basically. So this is what SPX did last week as far as the weekly chart. If I was going to look at where would be some support on the weekly chart, it would be down in this general vicinity. There is a gap here, a buyer's gap there that has got a little bit of support. That's below 42, just above 4,200 is there. That will give you a little bit of support right in this area. You can also see here in this area that same place played resistance. Support and resistance are interchangeable. When the price is below it, and if it bumps up it's called resistance. If price gets past it and goes back and bumps up to it going up, then it's called other way around. If it bumps up against it, that's resistance. If it's above it and it comes down, that's called support. So support and resistance can be interchangeable. Okay, and right now we're right into a support, right real close to a support area, which is about 42.05, but we're currently at 42.24. Okay, that's to let you know that we're close enough to what we see. Do you teach how to option trading? Yes, I do teach it. That's what I'm talking about right this minute. I do teach how to option trade. I do teach options as a seller because I teach selling options, not buying options, and there is a difference. Join over Alan Lyons. Come over to the YouTube page or find me on Facebook so you can see my screen. All right. So that's what went on last week in the market. There was a big red week for the week last week in the market. Let's switch over to the daily chart and see what the daily chart looks like for the, yes, I do teach selling. Yes, sir. You can find me here. Of course, you found me. You can find me on YouTube. You can find me on YouTube. I have a bunch of stuff over there about selling options. Alrighty, so this is our daily chart. Daily chart. Notice here we've got support here in the area of all this here is showing support, right in the area where we are, 42.31. We're all in this zone right now. And remember, anytime you put a line on a chart, it's a zone. It is not just a hard line. Even though I put the line at 42.20, 42.31, there's space here. You see how these wicks are down here, and you got to give yourself a little bit of room. So a line I put there, I don't put the whole zone because that would make the chart look all, crowded with stuff. But I put a line, and the line there lets me know that it's a zone. It's got a plus and a minus to go with it. Okay. And then you're looking at resistance. You can look up here at the top for some resistance. But these last 5 days, we had Monday and Tuesday green days. They were about the same. Yep. And then when it hit this resistance just one more time, 43.73, it came on down from there, and it came down for the next 3 days. That is what happened last week. This is what happened last week. And we're now into a support area, but there's a lot of things that are working against going up anymore at this point in time. Let's talk about some meetings and stuff that are coming up next week. The calendar. Our calendar for next week includes some red folders. Red folders indicate generally high volatility, and orange folders, medium volatility. Yellow folders says low volatility expected. But those things, it all depends on what's said and what's done. Just, who's doing the talking. All those things matter, right? So on Monday, there's nothing on this calendar for Monday coming up for tomorrow. But on the 24th, which is Tuesday, we've got PMI data coming up on Tuesday morning at 9:45. And the Richmond Manufacturing Index is orange, but the PMI data is red. PMI data is Purchasing Managers Index. And why do we care? We care because it's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. That's why that's important to us. Where's my X so I can exit back out? There we go. Okay, so that's on Tuesday. Wednesday, we've got new home sales, orange folder, crude oil inventories. Basically, what's the inventories of our oil? It always says yellow folder, but I always say this too. It's probably an orange folder because what are going on with our oil matters. And USD, Federal Chair Powell is speaking. It's at 4:35 on Wednesday, so the market will be closed when Powell does his speaking. But we also know that the market does respond and react when Powell speaks. So Thursday, we've got some things. GDP in the morning, unemployment claims first thing in the morning, 8:30 before the market opens. We've got core durable goods happening. FOMC member Waller speaks at 9, pending home sales at 10, natural gas at 10:30. So what's happening mainly will happen before market opens on Thursday. But I'm going to talk earnings here in a minute and tell you some stuff that's going to happen on Wednesday. Earnings that are definitely going to affect Thursday and suchy. And then Friday we've got U of M consumer sentiment. PCE data is a red folder that always carries with it high volatility. Personal income, personal spending, month over month. Those are before the market opens. FOMC member Barr will speak at 9. And we've also got 10 o'clock University of Michigan consumer sentiments. That's all Friday. Lot happening there. Let's open up our earnings and see what's going on there so I can share with you what's going on with earnings. Okay, I don't want all the things at the bottom. There we go. Maybe a little bit bigger. There we go. So we got several things coming up on earnings next week. Last week we had several banks. A few, I think Tesla reported last week. This week we're going to have some biggies. Monday we've got Phillips, some financial, HBT Financial, Bank of, looks like Maria, Bank of Hawaii, and the Bank of Hope. Those are all. Cleveland Cliffs is going to be Monday after market closes. Cadence, Logitech, Alexandria Crown, Berkeley, PCA. Tuesday morning before market opens, Coca-Cola, one that's a pretty big recession stock. And it pays good dividends it pays steady dividends. I don't know if it pays good dividends. It pays steady dividends. Coca-Cola, Verizon, GE is there, 3M, Spotify, Next Era Energy. Energy is a big thing here. You got to keep your eye on the energy. Centene and General Motors is on Tuesday. General Motors on Tuesday. On Tuesday, after market closes, though, here's the biggies. We've got Microsoft and Google reporting Tuesday after earnings. Those two are going to have a heavy impact on the market subsequent day because they're going to report after close of the market. But those two are heavily, they're large or they're good sized positions in the S&P 500. So when they move, the S&P 500 can move. Okay, when they move, the S&P 500 moves. Snap is there, Visa, Teladoc, Texas Instruments, Boyd, Range Resources looks like, and Weatherford. Wednesday morning before market opens, we got Boeing, T-Mobile, Old Dominion is going to be there, Thermo Fisher Scientific. General Dynamics is that they Lithia driveway, ADP, then Hilton. Wednesday after market closes, another one. We've got Meta reporting Wednesday after the market closes. So we're going to probably feel the effects of Microsoft and Google. We're going to, they're reporting on Tuesday. We're probably going to feel their effects on Wednesday because the market will open back up. Probably at the open, people will either be saying, selling, buying, whatever happens there. People are going to be making their movements to the next piece there. Hey, and then they're going to be making their moves on that. So Wednesday, you're going to see the effects of Microsoft and Google. That's going to happen on Wednesday. But then on Wednesday after market, we're going to have Meta report earnings. And when Meta reports earnings, we're probably going to feel that the next day. IBM is also Wednesday after market closes. O'Reilly Auto Parts. QuantumScape, I think it's Scape. Baker Hughes, all those are for Wednesday after market closes. Thursday morning, we've got Royal Caribbean Group, Hershey. I've been to Hershey, Pennsylvania, and took the tour. I went on the tour of the factory and saw all this candy and stuff being made and was like, wow, who knew? I did not know all those things were happening in Hershey, Pennsylvania, but I enjoyed my tour and my time there. UPS, Southwest, Northrop Grumman is all Thursday before market opens. Valero, Tractor Supply, Merck, Newmont. Okay, Southwest. Did I say Southwest? I think I did. Altria is one I missed. Thursday after market closes, Amazon, which is where we're going to see that one pop up and cause effects on Friday. And we do know Amazon is on the, Enphase is also here. Intel is here. Chipotle, Skechers, good old Skechers. Capital One, United, I'm not sure what that says, something Street. No, United Steel and Valley. I think Valley is an oil company here. ExxonMobil's Friday morning. AbbVie is pharmaceuticals. Chevron, Charter, Phillips 66, some more oil. Alliance, Auto Nation, Newell, and T. Rowe Price. All righty. So these are the things. Of course, this is not everybody for earnings, but it is a lot of the bodies. There's earnings or Ford. I didn't mention Ford and Chipotle Thursday after market closes. But these are not everybody. This is not everybody, but it's a lot of people, right? A lot of the companies we are in earnings seasons again for the fourth quarter. We are in the earnings season. So those things cause, effects, ripple effects in the market. They do have some ripple effects. Okay. So let's move forward. I think I've covered a few things on my calendar. Yes, I did. Yes, I did. Yes, I did. Yes, I did. Okay. Let's talk about some trades potentially for this coming weeks. See what we could possibly look at there. I posted today. I think I've just closed what I wanted to have opened. There we go. There we go. Open back up. I should have closed it. Here we go. Some potential trade ideas for the week. Again, nothing I say in this call is trading advice. I'm really just talking about some different things that I know, some different ways that I can help, right? And these trades could potentially be some that are worth looking at. So I put all on one chart this time. Usually I put these on different, slides, but I put them, they all fit on one because the market is definitely suppressed. Cash secure puts and cover calls kind of go in the upwards direction. If you already own the shares for covered calls, you do want to If you already own 100 shares, you can do covered calls on them, and that'll help you to make money off of your shares while you own them. But if you're looking at covered calls as a strategy where you basically buy them and sell covered calls on them, then you kind of want the stock to be going in an upwards direction. If you already own them, though, if you already own 100 shares, you want to utilize those shares if you can as your benefit, right? Benefit from them while you're waiting for them to do whatever. If you really want to keep them, then you want to get a strike that's above your cost basis, right? And keeps you in a place where you can collect money, but you're not concerned about your strike getting breached. But if you're not as concerned about keeping the shares or not, you'd rather be able to trade them out for more money you paid for them. So let's say you have a 3 strike, your cost basis is a 3 or a 4 or a 5. Let's say you choose 5. If your cost basis is a $5 stock, you want to do a cover call at a little bit above that. So if they do get called away, they're at least called away and you make a profit off of them. That's what you want to do. But if you have a $5 cost basis on a stock and you really want to keep it, then you want to make sure that you go high enough. You want to go beyond resistance to make sure that, well, to be more sure that it doesn't get breached. You can never make sure. You can be more sure because the stock market does what it wills. It does what it wills. Okay, so cash secure puts. Cash secure puts. I'm going to grab this. I just put it here at the bottom, but I'm going to grab it and make it where in a comment. So if you want to see it and click on the link, you can. I'm going to put it as a comment instead of just as a. There we go. Back to the banner. Back to the banner. Cash secure puts and covered calls. Those two things are a part of the wheel strategy. Cash secure puts and covered calls are a part of the wheel strategy. Got a few opportunities, maybe finger, and I want to replenish is that REPL, and then covered calls SoFi 9 strike. They are looking for the 11/17 expiration. You can also use cash secure puts and covered calls. You can also use those as credit spreads if you don't want to put up the collateral for, let's say, a 6 strike put. If you want to do, a 5.56 as far as put credit spread, you can always kind of interchange these around, right? If you're looking at call credit spreads, got a couple of options there. We've got INTC, which is Intel. Intel may or may not be a good move for the week. Well, it's got earnings this week, but we're talking about looking at 11/17 as your expiration. So it may be all right because you're going to give yourself the time for it to do whatever it's going to do for earnings and then to settle down a bit. And then you've got General Motors is there. GM, I think, had earnings set on the earnings list for this week too, which is why you do want to go out a little bit further for your expirations. For your put credit spread, you've got some opportunities: AMC, Palantir, and Lyft. Right? If I'm talking about stuff that doesn't make any sense to you, you can always check through my YouTube channel and find the different strategies I'm talking about that have interest to you. One thing I put up here on there it is. I put that here. If you don't know what trading strategy is perfect for your personality and your circumstance, because sometimes your circumstance changes, where generally, so I'm a teacher. I teach college kids, but my semesters kind of ebb and flow. Sometimes I have a whole week off, or spring break or fall break or whatever, or it's Thanksgiving or Christmas, and I've got time where I can watch and trade all the time. But then there's other times, like now, that I'm teaching throughout the week. And because I'm teaching throughout the week, my amount of time that I have given that's free to trade with is not as much. So the strategy that I use may ebb and flow based on the kind of time I have. Of course, my community trades SPX 0 DTE every single day. That requires a lot more watching. Well, if I'm teaching all day, I can't watch my charts. I wish I could, but I can't watch my charts. So that means I have to trade strategies that are either going to allow me, and that one will allow me to enter much later in the day, or I have to trade things that are more passive. So I trade things that are more passive when that happens. All righty. That's how that goes. I see that Alan as well. I would like to learn more how to trade options on the sell side. Do you have any recommendations on where to start as a novice? Yes, I see that you hop from there. I actually do have a place to start as a novice. Alan, definitely go through the the trading, did I just do anything with it? Go through the trading strategy for you. You want to make sure that you are kind of clear on what trading strategy you do want to lean in on, because once you know what you're looking for, you can go straight and dive deeper into that. It's going to depend on, what kind of, money you have available, what kind of collateral you're working with. Those things are going to matter. Your skill level, your time to watch. Do you want to generate, 5 to 10% returns each day? Of course, most people want to generate 5 to 10% return each day, but then your life doesn't lend itself to that, because with that comes a lot more time management. If you are one who is really busy all during the day, maybe you work a 9-to-5 job and you're busy during the trading day, then you need to use a strategy that allows you to kind of set it and forget it. So there's criteria that goes along with what you should do, and that's going to be based on your life. And then what you do next is going to be based on what you find out about that trading strategy. That was a wonderful question, and I'm so glad you asked, because you're probably not the only one who'd like to know, where do you start? Where do you start? Okay, where do you start? So let's see. I was mentioning the other day a little bit about this company. Where did you go? Let me stop trading. Let me stop sharing while I figure out where I'm going. Right, where I figure out where I'm going. Automated trading is a thing that is coming about, and it's being utilized more and more. Right, and I've been working with a company called PeakBot. PeakBot, I can share my screen again now. PeakBot is an automated trading company for sellers. Automated trading for sellers, which means they do the wheel strategy. They have the wheel strategy, which is what we were just talking about with cash secure puts and cover calls. They do it on an automated basis. They have iron condors, which is for SPY and triple Q, 1 DTE. And they also have momentum. Momentum is basically where you're able to enter and buy shares. Well, the automated trading arm, the hands-free trading, will enter shares for you based on if the market does a pop on that stock or whatever, and then you get up some profits in it, and the bot then closes it for you. But the one that I want to talk about more of these three is the wheel strategy. The wheel strategy is one that, again, you sell cash secure puts, collect a premium for that. You put your collateral up and you sell you get a premium for that sale. If at the end of the time the price is higher than your strike, then everything just closes, your money's released and it back to you and everything. If at the end of expiration, which for PeakBot they do it per week, if the end of that expiration the price is below your sales strike, then you are gifted or put 100 shares of that stock into your account, and then the bot begins to sell covered calls for you after that. But they have a list. They have a watch list, which is open for anybody to use. You can go to usepeakbot.com and do a 30-day trial if you're interested. Be sure to tell them Arlissa sent me. Arlissa sent me. That Educator2Trader girl sent me. And then you can do a 30-day trial to just see how you like it. The bot connects to TD Ameritrade or Tradier. If you have a Tradier account, TRADIER, and TD Ameritrade, you can use one of those. And you can try out one of the bots for a 30-day period of time. I've enjoyed it from the standpoint of it has given me the ability to enter into some trades that I wouldn't necessarily be watching during the day. I already just mentioned that I'm a teacher. So I'm in college. I'm in classrooms during the day. And while I'm standing there, listen, virtue goes out when I'm teaching sometimes. I have to be so dialed in that, I have to kick in. My anointing has to kick in sometimes. So I can't literally be doing that and kind of halfway. Sometimes I get to, glance back at my charts to just see where stuff is. But for the most part, I have to be focused on trying to convey the material of how to, work with complex fractions. How do we do this? So anyhow, PeakBot has done some of the trading for me. It's basically managed. I was trading a few weeks ago. I did a not covered call. I did a cash secure put on Riot. Let's see. Riot is down this list. Let's see what Riot is right here. Riot is right here. It's a $8 strike right now. If we're going to do a cash secure put on Riot, it would take $800 of collateral. So they tell you how much cash you needed estimated. And I was selling puts on Riot a few weeks back, and the price dropped into my strike. So I ended up being gifted 100 shares of Riot stock. And the next week, so for the past 2 weeks, the bot, PeakBot has been selling covered calls on my 100 shares of Riot. So it has a memory, of course, that I was assigned at the $10 price point, even though Riot is now at $8.87, I believe was the last pick or last look at the stock price. So I'm making covered call premiums each week until Riot comes up and blows past the 10, which I'm completely okay with. If it blows on past the 10 strike and I sell my 100 shares at $10 a piece and collect my monies, I'm going to be okay with that. But there's other things on here like Marathon Digital, which is in the same space as Riot. So, if you're doing one, you may not do them both. They're in the same space. Sunrun or Run is here for the $9 strike price. And I thought there was one more I liked. Oh, Neo. Neo is down here at the $7 strike price. But they also tell you here your estimated return, percentage return. All of these yellow ones have earnings this week. Okay. So when you have earnings coming on a stock, there's almost always higher premiums because of the volatility. When a stock is getting ready to have earnings, volatility or implied volatility for that stock is much higher. So you generally can take in higher premiums. But you also have to be more mindful of that, because if they're going to have earnings, which is like a binary event or something that's going to happen to it, the price could significantly drop for earnings. Of course, it could significantly go up. If you're selling puts and going up, that's good. But if you're selling puts and it drops down, maybe not so much. So you have to keep that in mind. You just know that these yellow ones are for earnings. And anybody can see this watch list. You go to usepeakbot.com. Everybody can see this watch list. So you got the wheel, momentum. Even with momentum, though, you can pick whatever stock you want. There's only a few stocks, not too many are on this list, on their watch list, but you can pick whatever stock you want to use on PeakBot. So if you decide you wanted to do that one, you would just select it and type in the ticker that you want to do, and it'll buy stocks based on how much money you say. You can say, I would like SOXL and I'm willing to spend $100 on it. So when the bot or the algorithm determines that that's a good trade that's coming up, it will buy you whatever number of shares your $100 can afford. If your $100, if the stock was $25 and your $100 will buy you 4 shares, that's what it'll buy you. If you got $100 and the price is $20, it'll buy you 5. If you got $100 and the stock price is $99, it'll buy you 1. So you choose how much money you want the bot to use, which is going to determine how many shares you do there. Okay. Oh, we're doing good. I've been on here 40 minutes. If you got any questions, please put them in the chat. Okay, so we've talked about, I think I hit my list. Let me see what my list says on it. SPX charting, earnings. We did the calendar. We looked at PeakBot and we looked at trades. Yes. Okay, I'm going to go back to the chart so we can look at what could be possible coming up this week. What could possibly come up this week as you're looking at it? For those who trade SPX, SPY, XSP, some of these things may be of interest to you. All righty, may be of interest to you. So the price has now, let me change it back to the daily because I want you to see where we are as it pertains to our moving averages. Okay. This here is our 200 period moving average. This is a trend line. I'm going to take that out so nobody gets confused. And this is our 20 period. This red line is our 20 period moving average. The price on SPX has now stopped just below this 200 period moving average. And know that the 200 period moving average is strong support and resistance wherever they fall. And that's because it is the last 200 days worth of data that have been averaged, right? So it provides a strong support and resistance. And it has just come down into that. Could there possibly be a little bit of a pop? Could potentially be. But listen, we always, I say this in my community all the time, we trade what we see. Trade what you see. I want to see if I can get me a pen that will let me do a little bit of drawing. I don't know if it will do what I want it to do. Yeah. Okay. Y'all may not be able to see that, but this is going down, right? You see my little thing drawn? And then it's going to go down. Y'all probably can't see that. And then it's probably going to take an up and go down to more. That's most likely what's going to happen. I'm going to make it thicker and we can leave it at green. So there maybe it's going to go like, potentially go like this. I can't say it's going to go because, you know, stuff changes. But the likelihood is that we will see lower highs and it will continue to go down a little bit. It will hit a place of support, because it always does. The stock market goes up and down. It never goes down forever. It never goes up forever. So if you're expecting, you know, it's going to go to the moon, well, it could, but it may not. Most times, almost every cycle is going to go up to a place. It's going to hit resistance and it's going to turn around, right? If it goes down, it's going to go down to a certain place, hit support, and then it's going to turn around. It may turn around hard and run back up to where it started, but it also may just bounce just a little bit, right? May bounce just a little bit. So my, thoughts are that it's probably going to go, may bounce a little, it may bounce a little bit closer, maybe even bounce in here and then go down to more. It could do either of those. I'm putting that one, I'll make that one blue so that way you can see that there may be a little bit of a difference there. Just because we're at the 200 period moving average, and I know that is support, it may go ahead and bounce a little bit and then come back down to more, right? It could. All right, it very well could. What you always want to do is do your charting on whichever stock you're going to watch, right? I'm going to turn this off now because I'm going to talk to the camera. Anything that you're trading, you want to chart your support and resistance. Now, if you're not sure what in the world I'm talking about when I say charting, I got something for you. It's on the way. It's on the way. It won't be long. I'll have a resource you can look at that's going to help you with becoming and beginning to chart, because it is the foundation of what we're doing. So you'll see people post charts, and sometimes now tell me, say in the chat if I'm talking about you, I want you to put a me in the chat. You're looking on some of the Twitter pages or you're looking on some Facebook pages and the person posts a chart and they've got all these lines and stuff going, and you're looking at that stuff like, what in the world? If that's you, put me in the chat. Put me in the comments like me. I don't know what that stuff is. I don't know what they got on here. I don't know what they talking about. Right. I know. And it's okay to say me, because for a long time it was me too. I was like, what? And even sometimes when people do charts now and they put a whole lot of stuff on the chart, I'm looking at like, why is all that stuff on the chart? And what does all this mean? Not only, I can see that there are lines here, but what does that mean? What does this tell me? How does this tell me what to do next? Because that's really what I've been wanting to know, is what we're going to do next. What we're going to do with this information. Again, I got something coming soon enough, because charting is so foundational. If you don't understand your support and resistance at a bare minimum, that's of course is the minimum, understand what is charting and how to chart, then almost everything else is going to be shooting and throwing rocks. It's basically, throwing spaghetti at the wall and hoping it stick. Now spaghetti might stick. So, throwing stuff at the wall. But if you're not comfortable or don't really understand support and resistance, then everything else is almost like a crapshoot. You can jump in like so-and-so is so-and-so's running, and you're like ready to jump in on it, not realizing that it might be running as the last exhaustion candle. There's such a thing, by the way. It may be the exhaustion candle just before it hits resistance and turns around. You jump in thinking this is a huge candle. I'm jumping in. We're going to make us some money going upwards, and it hits resistance and goes the other direction for days. And you're like, wait a minute, I got in thinking this was gonna work. And it doesn't. So that's why you have to have the ability to chart, so that way you can see the thing. So I got something coming for you. It's not ready quite yet, but it will be ready very, very soon. I do have, I think, on my channel, there is a basic charting video on my channel. Let me see if I can find it real quick. There's a basic charting video on my YouTube channel that we can maybe look at in the meantime while we wait. While you wait for me to get this together. It won't be long though. It's almost ready to be released. It'll be a free resource. I'm a novice as well. I understand the basics, but I'm not a trader. Yeah, we got to learn it all along the way. Listen, everybody, Lady T, and it's not just you, it's all of us. Alan also said this. We all started with nothing as far as knowledge. We started with no knowledge. Didn't know a thing. I didn't know a thing. I found out stuff along the way. I'm trying to find I found out stuff along the way, and I just picked up a little bit here, picked up a little bit there, kept picking up, but I had to start with no knowledge either. I was a novice, and and then you see, which things do you want to do? Like I was just telling Alan a little while ago, to see what kind of strategies fit your personality. Some people are more aggressive traders than others. Right? Some people are much more aggressive than others. Some people are way more passive and they're more conservative. You need a strategy that fits your conservativeness. Right? You need a strategy that fits it. Let me see if I can find. I do see some stuff here. Oh, here's one. How to chart like a pro. Let me go grab the link and put it in the chat. I got a lot of stuff on my channel with lots of different topics there. So definitely feel free to peruse the channel. Subscribe if you haven't already. Like and subscribe. Hit the notification bell so that way you can be notified. Of course, I'm live every Sunday around this time. I've talked about going live during the week sometimes too, and I may decide to do that. At this point, we're focused on just putting out good content regularly. That's nice and edited, easy to follow. You know what's coming, That's the difference between editing content and live. When it's live, you get the whim of the person who's just doing. And when it's edited, you can put some nice little format in it. It can, all the ums and the ahs. And when the person pauses to go find a YouTube video, that can be taken out with an editor. But yeah, we'll have something for sure. But go check out that video on charting. And look at whatever else you see on the channel that may be of interest to you as well. All righty. But what I was saying, you're going to make sure that whatever you're doing for the week with your trading, you want to start with some charts. Start with the chart. Okay. And if you don't know how to chart yet, then pause trading, pause this, that, and the third, and go learn the chart. All right. Go learn, get some ideas and understanding on that. The stock market ain't going nowhere. Believe me, it'll be right here. I know we're ready to make our money. Me too. But definitely we don't want to be risking it if we don't have to. So if charting is something that you still don't understand really good, take a little bit of time to learn a little more on charting. Okay. Then you want to read a little bit about what is going on with that stock this week. There may be anything in the news, anything that's potentially upcoming, things like earnings, how long before earnings does happen. Are there any other things in the news that are big time? Let's say you're trading a pharmaceutical company and they're getting ready to be told whether or not their drug got approved or didn't. That is a binary event. So the drug gets approved, everything goes good, wonderful, wonderful. But the drug doesn't get approved. Sure. I'm a SoFi fan. I really like SoFi, the stock, but SoFi has struggled a lot because of student loans and such. SoFi is not only a student loan company, but that's what they're known for. Their stock price has just kind of hung on along the way. They're still, holding their own, but SoFi really is going to be, I really believe is going to be, a 10, 20, 100 times what it is right now. But it's got to go through all the things because SoFi is upsetting an industry. It's upsetting an industry. I bit my tongue. That's why my mouth went all nuts. I bit my tongue. Anyway, SoFi is upsetting an industry. So that's why the regular brick and mortar banks aren't trying to let SoFi jump in and run to the moon, because SoFi upsets the banking industry with their management and what they're trying to do. Their whole process changes things. So they ain't trying to let SoFi just run on, right? But that doesn't mean it won't. It won't. It just means it's not so far. Same thing with like EV and all the other things that are around. Either way, second thing, first thing you want to do is chart. Second thing you want to do is do any reading and, kind of keep in the loop, in the flow of what's going on with that stock. Third thing, and this is probably the most important thing to do when you're trading, is don't try to trade what everybody else is trading. And the reason I say that is people will pop up and say, so-and-so is doing this and so-and-so is doing that. And you haven't looked at the thing, but you hop in and want to go jump on it. Well, first of all, by the time the person tells you what they're doing, they've already started doing it. So you are probably going to be behind the ball on that. You haven't done your own look and look see. You can take is, like for me, I'm a seller. Some of the people who say what their trades or whatever, they're buyers. Well, the buying and selling mentalities are different. So what the mindset behind those two are different. So I need, first of all, to see somebody who is operating in seller strategies, not necessarily buyer ones. Or if I'm going to look at somebody who is talking about buying things, I need to know that, so that I can change my thought process about how it's going to pertain to me, or how I can utilize that information as a seller. And that has come with time. So if you're somebody who's a newbie and you're not, seasoned very much, or you're very new to this, that may not be something you're able to flip-flop between these two things. A very key thing to get in the midst of all this stuff is education. Definitely be sure that you learn some stuff along the way, so that way you're not gambling with your money. If you don't know, you're just kind of gambling, and that's not what we're here for. We're here for the long haul, and we're here to learn what we're doing, so that way you can do it for a long time, and you don't need a person to ever call out a trade to you at all, right? You don't ever want to need that, because what if you're off in the Caribbean, dun, 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 you on a cruise ship, and you can't see what so-and-so said? You want to know how to enter trades for yourself from anywhere in the world, that where you may or may not need a third party to tell you what you should get in on and what you shouldn't get in on. You don't want to miss them. You're doing one thing, the message comes through and you didn't see it, and you're like, I don't miss the call out. Well, you want to be where you can really decide for yourselves, do your own calling and your own outing. Okay. That comes with education and comes with time and hooking up with somebody. Find a voice that suits you, hook up with somebody and ride with that voice. Don't listen to too many voices, ride with one. Try to keep your emotions in check. That's probably the hardest thing to do there too, keeping your emotions in check. FOMO, which is what I was just talking about, really. People are talking about something's happening. You scared if you don't jump in, you're going to miss out. So you go jump in on it too. FOMO, fear of losing your money, which means you'll jump out of trades too quick or jump into them too quick. Impatience, those things are there. And then being greedy. The trade is done, but you think you can get $5 more, $10 more out of it. So you stay, the price reverses and you still holding on, thinking it's going to turn back and go higher, and it don't work, right? Okay, I believe I've covered all of the things on my list. I hope everybody has gotten benefit. I was going to say, hope everybody's been blessed. Hope everybody's been blessed by our time together. That's stuff they say in church. I hope everybody has gotten great value out of the time we shared together. You got some trade ideas there. You've got some YouTube ideas on my channel you can go check out. Again, make sure you subscribe. If you are on Instagram, be sure to go over and subscribe to the YouTube channel, so that way you can always see when I go live. Alrighty, or follow me on Facebook, both places. Follow me, I'm in all the places. Educator2Trader in all the places. We've got courses covering all the things. I've got a membership where we trade together during the day. We do coaching calls twice a week, and we have a weekly day trading training. We have trading training every week, right? So for those who are no matter where you are in the process, we are here to help you get up and running, get your platforms together, get your trades together. How do we enter and exit trades? You guys got a group of people to work with you while you're growing, while you're learning, right? We do that every single week. You can find those things on Let me see. I'm going to type it in here. Got to type it into the Educator2Trader.mv site.app. Facebook been tripping about me and some of these links. It has decided that the link for my primary website is a persona non grata, which is a real website. I don't know why we got to go through this, but I have to type it in a little bit different. But this is where my original website is, and all of my stuff is there. All of our trainings are there. Everything you're looking for. If you want to join the membership, you can do that from there as well. Okay. I really wish you all a fond farewell. And I want you to know that we do two things while we're in the Educator to Trader community. And that is to stay green and get this money. All right. I'll see you all tomorrow. See you. Bye-bye.